fantastic 2013, 2014 also a decent but more good year in line with the market.
2013, an exceptional year with almost 5 years of returns in 1 year. This year a bit more normal with 7% return so far. I would say in general or more general terms that the large companies have been performing very well. We have Apple, Microsoft and Hewlett Packard as very strong performers this year. And we have also the big deviations between the different sectors. Telecommunications being the weakest and technology being the strongest.
There's been a lot of talk about bubble pricing. What is priced high, what is priced low?
It's been a lot of talk around the pricing of the technology sector. If you look on the overall tech sector, it's priced in line with the overall market at 16, 17 times earnings, but it's growing faster. So we think that's fine. We think it's an attractive place to invest. However, saying that, there are certain areas within the technology sector, cloud computing and parts of the internet, that are at elevated multiples. Those stocks corrected sharply at the beginning of the year, have regained a little bit now, but we still think that these stocks are grossly overvalued. However, it's a very small part of the technology sector, so one shouldn't draw the conclusion that the overall sector is expensive.
Apple, one of the world's most recognized brands, still growing.
Apple is very interesting and a company both in terms of the products but also in terms of valuation. Apple is now trading between 11 and 12 times this year's earnings, which we find very attractive for a company growing earnings close to 10% annually. I think some of the things we look upon as very positive for Apple is the very high customer retention. Very few people are leaving them to move to the Android ecosystem. This year, in particular, there's a very interesting product cycle with the phones with larger screens, as well as a watch coming later this autumn, which we think is not fully reflected in earnings estimates. The combination of estimates moving up and low valuation, we think is very favorable for the stock.
You've been buying a lot of Oracle this summer, and also Yahoo is one of your favorites.
Oracle and Yahoo are two very different investments for us, but to start with Oracle, as Anders mentioned, we think it's in the large cap camp in the US, which are very attractively priced. It's priced at around 12 times earnings, and earnings are growing in the 5 to 10% clip. There are excess worries around the competition from cloud computing, and we think that they will hold their share and do well over the coming years. That makes this a very attractive investment for us. Yahoo, on the other hand, we own that for their ownership stake in Alibaba Group. Alibaba Group is the largest e-commerce company in China, and it's coming to the market in the next weeks. We think that the valuation of Alibaba Group are not reflected in the Yahoo share price. We think it's low risk and high upside in Yahoo at these levels.
There's a lot of things going on in the world. Crisis in Ukraine and Russia and China. Not necessarily doing that well. Can technology stay away from the broad market and do something?
A lot of instability around in the world. We talk about Ukraine and the Russian crisis. I think the risk for tech, which is a very international sector, is obviously there. And we think the main risk will be that the market share could shift from Western companies to Chinese companies, and that there will be a closer tie between Russia and China if this crisis persists. So that's obviously a risk. When it comes to the Chinese market in particular and the macro risks down there, that's been around for some time, we think it's still around. We still invest in attractively priced Chinese companies and companies with exposure to China, which have a favorable valuation. But there's obviously macro risk for the Chinese end market.
Are you positive to technology going into the second half of 2014 and also with regards to outperformance?
As Sverre earlier mentioned, when it comes to the pricing of the sector, it's still a very high risk premium, which is good. Interest rates are still very low, and the larger companies within tech is very attractively priced compared to the structural growth we see in the industry. So we are still on the positive side when it comes to valuation and the opportunities in the sector.